Okay, good morning. This is the trading plan for December the 16th. It is about 8:15 a.m. Eastern Central Time. And I want to recap the last couple of days of trading, and that will help to establish your understanding of what we're going to do today. Going back on Thursday, if you look in here, we were talking about after coming down and buying these puts, seeing how we had support in here, establishing the calls the very next day. So what we did here is coming down, establish some puts, some very short-term puts. These were going to expire the following day. We took those profits, rolled them out to the next week, and established puts down here at 60. When we got a reaction off of these areas, came back up on Friday, we established calls here. We took the calls off on expiration day and rolled them up to the next week. So we invested these very short-term profits into the next week. Okay, so got a reaction yesterday to the downside. Our objective for this trade for these puts in here, now again, we're on both sides. By looking as this market follows down to the levels, this is how we trade the levels. We've got a level here of 66, and you see these gray areas, these gray lines represent secondary levels. And when the two become close together, these major support area lines, as well as these secondary lines, then we really start to see the potential here for a pivot. We just let the market confirm it. Now, we came down here because we have this target in place and can have the order in the market on a theoretical basis as to what the options should trade for at this area. And so once it got down in here, we were able to establish and exit that trade to the downside. This happened in the middle of the night, so this would have been a great place to establish calls in here, but we were sleeping. But we still have these calls up in here, so we were able to leg on and leg off these markets using these areas as targets, these support and resistance. So the support is in blue, resistance is in red, and you see how this helps shape what we do. The confirmation, and this is a time-based chart, are these long tails in here. They usually accompany major pivot areas because they're squeeze plays. And, you know, for the futures guys that are trying to participate in this market, this is where they get stopped out down here. And that's the beautiful part about being active in the options market, is that essentially I don't have a stop in place. I'm buying these options so cheaply that if they go to zero, it's not going to hurt me because I'm usually on the other side of it. But with the futures down here, you have to endure all of this risk. And they're looking for you down here. That's the dangerous part of the futures. So again, we're coming up in here, and you see how this primary resistance area 86 is very close to the secondary resistance area 1787. So between 1786 and 1787, this is our target area. Anywhere in here would be a fine place to take off these calls. So we made on each leg. And what I expect to see during the course of this market open is potentially a reaction that might look something like this. And again, this is how we use the levels. And let the market confirm that if there's going to be a pivot here and this is going to move to the upside, well, the next area of resistance and potential for the long side is to take this market up to 1796. So that's how we're going to participate. So puts are off. We're going to get the calls off here shortly. And then we're going to look for a reaction off of this area to perhaps get long in here. Going to the upside, the major pivot areas that we concern ourselves with is the 1786, 1796, and then up to 1810. To the downside, major areas of support are going to be 773, 65 and a half, and then below that 52, and then below that is 43. So mark your charts with these areas, and then watch how this market unfolds today. And we will see that, you know, from day to day, you never know which way these markets are going to go. But I can tell you that for the most part, these areas that I just discussed in here will tell part of the story. We're just going to let the market confirm it and try to be on both sides of it so that as we approach these areas, we can leg on and leg off without taking on the risk of predicting the next turn. As far as specific entries are concerned, just for an example, so you know what to expect by way of the tweet, if we come back down in here to the 1780 area, I'm going to be looking at 90 calls or even calls as far as the risk is concerned. So it kind of gives you an idea as to how I pick and choose which options I want to use. And these will expire next Friday, which is going to be, the 20th. the 20th. So that's how I try to keep about a 50% delta on my entries or less. Now, given that there is about 6 points worth of movement in here, that's usually all I need to try to establish my position on both sides of this. So we're going to look for a topping pattern in here first thing this morning and see if we can put some calls on here with the purpose of coming down. To establish some puts in here with the purpose of coming back down into the secondary area so that I can roll those out. So I'll take a little bit of profit if this starts to roll over here as the open outcry market opens, come down into this 80 area. That's all I need. And so I'll be a little bit more aggressive with my selection so that I can pull profits out of this and then come down here and buy the 70 puts. So that way, if this market turns from here to the downside and doesn't find support and comes right back down, I can be a part of it.